I have 23,000 ounces of silver. Silver's at 30, call it $30. I bought it at 11. Not that that matters, but that was 2014, 10 years. Okay. That's not a good trade. Okay. 11 to 30. Y'all, that's a good trade. That's a horrible trade. Dude. Over 10 years. Horrible trade. Horrible. I should have done the real estate. But what I should have done is Bitcoin. Because I could have bought this at, well, gold was at Bitcoin was at $800. So I got 23,000 ounces. It's worth about call it 700 G's. Okay. Divided by 57,000. And that's going to be what? 10, 12, 15 Bitcoin, roughly, right? So, I mean, that's a no-brainer. That silver's just sitting there. Could silver go to $50? Done at one time in 1,000 years. Definitely it's half the price of where their high is. Gold's already hit a high. It's a pain in the ass to move, dude. I'm going to put all that stuff in my Range Rover. That'll take us 30 minutes. Then I got to drive somewhere. I got to have them count every ounce. It will literally be a whole day. They will then send it off to get it tested to make sure I'm not ripping them off. They'll lock in a price if I want to, but more likely with that kind of volume, they'll be like, hey, once we tell you it's real, we'll let you know what the price is. So I will be able to get some fiat maybe in a week. Bitcoin could move 15, 20 grand. This is the problem with silver and gold. And I'll tell you something, these people in Saudi Arabia that have been playing with gold for centuries, their families are used to hanging. Like when they were little babies, they'd walk down to the vault and they'd see gold. Like my kids have seen all this. They've seen the silver, the gold, and stacks of cash. Imagine being a Saudi prince and you grew up that, like you're used to seeing a vault full of gold. Dude, they're going to get Bitcoin so fast.
Recently, Gary Cardone, CEO of Cardone Ventures, talks about his experience with silver and how Bitcoin would have been a much better investment had he invested more in it earlier. He bought 23,000 ounces of silver in 2014 for $11 each, and now it's worth about $30 per ounce over 10 years. This isn't a big gain. He believes that if he had bought Bitcoin instead, he would have made a lot more money. Bitcoin was $800 back then, and now it's worth a lot more. His silver is worth about $700,000 now, which could be exchanged for about 15 Bitcoins. That said, Cardone believes selling silver is a hassle. It's heavy, takes a long time to verify, and can take days to sell. On the other hand, Bitcoin is easy to trade quickly and can go up in value fast. Let us now view clips of Gary Cardone as he explains his latest outlook on Bitcoin. Give this video a like to show your support and subscribe for your daily dose of crypto news. We hope you enjoy. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Okay, so let's come to Bitcoin. Guy has 1,000. Now this scenario, and then I'll change this here in a second. But this scenario, this guy has 1,000 apartment doors, and this guy has 1,000 Bitcoin. He bought these Bitcoin. It's somewhere between 300 and 3,000. Okay, so he's done very well. He's got $330 million to $300 million, if I did my math correct. Is that about the same? Yeah. Okay, so he's got $300 million. He's been in Bitcoin for 8 years. His family's unhappy. His family's unhappy because they're worth $300 million on paper, and the value goes from 300 down to 100, then goes back to 300, then back down to 100. And the family is sitting here. People forget about this part of it. Family, the kids, the wife, the ex-wife, the kids. You know, like families get a little complicated from time to time. They're worth $300 million, and they're still like living on an island. They don't have air conditioning. They're sick and tired of living like on an island. Like, hey, we're worth $300 million. Can we pretend like we're worth 20? So they have no liquidity. You start getting pressure from other members of your tribe, right? Hey, look, man, I thought we were worth something, right? So my life's not changing. And this happens, right? So this guy has, what does he have? He has zero income. Bitcoin's not producing any income. Now you could say, well, he could go stake that, and yeah, he might be able to do. But right now, I'm pretending Bitcoin is very difficult to create a yield on. So Bitcoin's going up 40% a year on year. Okay, 40% a year. Real estate, you go figure out what real estate's done. I have no idea what real estate is or is not doing. We know this chart because we have a chart. It's 45% a year, maybe more. There's no yield on Bitcoin. There is these are the positives. Okay, these are the liabilities. Excuse me, that 40% return. Highly liquid. Okay, this is where I get really interested for real estate. The characteristic of this liquidity affords me the opportunity on a Friday night, July 31. There's an apartment building in Chicago that at 12 midnight, the bank account, it hits a covenant breach, and like by Friday afternoon, by 5 p.m. Eastern time, if they haven't sold that property, like they have a big problem. The bank's literally like, we've taken it from Sam. Sam's no longer, he's breaching his agreement with us. I have 30,000 of these, by the way. I have 30 or 50 or 100 or 1,000 Sams that I need to handle. Now, Sam here, you might be cool, but I have 399 other Sams. And this pool now is so toxic, I don't really care about you, dude. Actually, you become the guy that I go attack first. You're my best client in these 300 that I've loaned money to. I will force you to give me the money. And you're going to be sitting there going, dude, I'm paying you all my distributions. I've done everything. You don't realize there's 299 people that haven't. You're the first target for them. Get some of that money back in the pool. Their management is literally into risk management at that point. Close the contracts. Are you telling me a guy with 1,000 Bitcoin that can transact at 11:59 p.m. right before that deadline isn't in an awesome position to go, hey, Truist Bank, how about if I send you $130 million right now in 3 minutes? And I'll be buying this tonight before your covenant's breach. Like I can get you out of your problem before Monday wakes up. Dude, you cannot tell me you can't buy that for a discount. On a Saturday? Hey, dude, you're not having to go to the bankruptcy court. You're not having to go to get everybody out of court, go collect the money, do the lawsuit. So like I immediately look at this and say, whoa, the liquidity and 24/7 nature of this should give me, this is an option that no one else has. See, I keep mentioning the word option. The option to transact at midnight, 2 a.m., Dubai time, London time, in London or in Singapore or in Florida, logistics have been removed, and so has time. Like Bitcoin removes time and distance, man.
Gary Cardone compares owning Bitcoin to owning apartment buildings. For instance, a Bitcoin owner may have 1,000 Bitcoins worth about $300 million, but their value could go up and down a lot, which could put a lot of stress on his family. Bitcoin doesn't exactly generate regular money, but it grows about 40% each year and can be sold anytime, even on weekends. In Cardone's example, the apartment owner has 1,000 units, which does generate regular money but are hard to sell quickly. If there's a problem with the property, it can be a big hassle to fix. Gary highlights that Bitcoin's ability to be sold quickly, at any time, is a huge advantage. This makes Bitcoin a very flexible and powerful investment compared to real estate. Now here's more clips of Gary Cardone.
We have Mr. Real Estate Guy, and he owns 1,000 apartment doors. He bought each one of these doors at, call it $150,000 each. Okay, so what is that? That's a 10, 15, $150 million. It's $150 million investment. 1,000 properties. Is that right? 100 properties at 15. These would be $150,000 a door. Okay, per door. Just for your information, when I started investing with Grant, Arizona, 15 years ago, we were buying these doors for $45,000 a door per door. Okay, that means apartment 1B. That's, you buy that apartment. If there's 100 of them, then you're paying 45,000 times 100. Now these are probably 200,000. Okay, they just went up, and they went up. Literally, this is now, you can't buy any of these. This is now $200,000 roughly. Okay, so in 15, 20 years, it went up 5x increase. So anyway, this guy has 1,000 doors, and he is probably generating about 6% on this $150 million investment. Okay, so that is about $900,000 a year in interest, right? I'm doing this without a calculator, so I could miss a zero quite easily. So he's generating $900,000 a year in interest payments from the yield that he's getting from the real estate. I'm assuming a 6% yield. Now, this property is kind of interesting because he bought it for 150, but all he had to do was put about 20% down. Okay, so he needed $30 million, okay, to buy $150 million. Okay, he's got an interest rate on the other $120 million of, call it 4 or 5%. Okay. And he's generating yield from selling the door, renting the doors every month. Okay. His yield that he will rent to you for will be greater than the mortgage. Right. Yeah. So he does a deal. He buys a property for $150 million. This is what the real estate guy will do. The way Grant and I do it, we buy the property for cash. We walk into the bank, go, I can close in 10 days, cash. We then, after we close the deal, we go to the marketplace and we raise the money, or we go to the banks and we say, hey, we have the $150 million. What would you loan me money at? If you can loan me money cheaper than what I think it's worth, I'll borrow the money from you. So Grant goes and gets $120 million at 4 or 5%. And there's a spread in there, right? This investment will be 10 years plus. Okay. Now, why am I bringing that up? Because the duration for Bitcoin is a little different. Okay. So that's all we're doing. We're just comparing. We have a real estate investor. He doesn't know anything about Bitcoin. He's got a ton of real estate. My premise is that at least his distributions, okay, these are distributions, monthly distributions usually, okay, I think at least these distributions could be invested in Bitcoin.
Gary Cardone explains how a real estate investor could benefit from Bitcoin. In his example, the real estate guy owns 1,000 apartment units, bought for $150,000 each, making a $150 million investment. He earns about $900,000 a year from rent, having only put down $30 million and borrowed the rest at 4 to 5% interest. Over the years, property values have gone up a lot, with units now worth around $200,000 each. He suggests that while real estate is good, the investor should think about putting his rental income into Bitcoin. Bitcoin can offer high returns and is much easier to buy and sell quickly. This would give the real estate guy a chance to benefit from Bitcoin's growth and liquidity, making his investment portfolio even stronger. With all of that said, do you agree with his sentiments? Share your thoughts in the comments section below and continue the discussion. If you found value in this video, don't forget to give us a thumbs up and subscribe to our channel for more insightful discussions on cryptocurrency and finance. Thanks for watching. We hope to see you again. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.